The semiconductor industry is one that I'm very bullish on in general, and I believe it is at the core of all major innovation across the world. However, there are 5 individual semiconductor stocks that do stand out to me as being my favourite stocks at this current moment in time. So in today's video, I'm going to be taking a little bit of a closer look at these 5 particular picks, and hopefully giving you a bit of insight into all 5 of them and why I believe they have good long-term outlooks. If you enjoyed today's video, please be sure to leave a like. Without further ado, let's get into the first pick. So first up today we have NVIDIA. So NVIDIA are leaders in the GPU and graphics card sectors, providing the necessary high-performance components that are needed for powerful computing, gaming and AI technology. Now, as of late 2021, NVIDIA have a dominant 83% market share of discrete GPUs, meaning that NVIDIA do sell 5 out of every 6 graphics cards right now. But it's not just computer chips that NVIDIA operate in, and over the years they have branched out into other sectors like data science, modelling and simulations, and also they do provide chips for autonomous vehicles. Now, NVIDIA are significantly contributing towards any cutting-edge innovation with the computing power that they do provide. So NVIDIA have been designing chips for cloud-based AI applications for years now, knowing that demand was starting to ramp up. And then because of this, NVIDIA's chips that they are creating right now are used for almost every cloud computing provider, which includes AWS, Microsoft Azure, and also Google Cloud. So Amazon and Google do both make their own AI chips, but still choose to use NVIDIA's chips because they are just that good. And then finally, NVIDIA are consistently increasing their revenue and income every single year, and are expecting to grow from $16.7 billion of revenue in 2021 to $26.9 billion in 2022, which is a 61% increase year over year. And the majority of this revenue is coming from the gaming and data center sectors of their business. So next up, we have one that is maybe slightly less well heard of compared to NVIDIA, and that is Micron technology. So Micron does trade at a lower multiple than most other semiconductor stocks, and right now it does offer great value for what you pay for, in my opinion. So the current PE ratio is around 8.5, and the forward PE ratio is around 7.5, which is definitely cheaper than a lot of other stocks, let alone for stocks that are in the semiconductor space, which is a sector with substantial growth ahead of it. So Micron does make 2 types of chips. Now, firstly, we have the DRAM, which stands for Dynamic Random Access Memory chips, and these are used for most kinds of computing, which includes PCs, servers, and also smartphones. And then second of all, they do make NAND, or flash memory chips, and these are used in things like SSD drives, memory cards, and also USB sticks. So the memory market has a small number of players and does require big and expensive chip factories to produce these chips, which does give Micron quite good pricing power on their products. Now, demand for Micron's products is strong, and the bottom line growth has been impressive, with revenue in 2021 growing 29.2% compared to that of 2020. The auto industry is shifting towards autonomous software, and it is in serious need for memory capabilities. Now, Micron currently supply 50% of the auto memory market, and the DRAM market in the auto industry is expected to grow at a compound annual growth rate of 30% up until 2024 at least. So this definitely does put Micron in a good position to capitalize on this growth within the auto market. So next up we have ASML Holdings. So ASML are one of the most important semiconductor companies in the world, but largely go under the radar for a lot of investors. Now, they are the only company that builds extreme ultraviolet, also known as EUV, lithography systems, and these are machines that are used to create microchips. And these machines did take around 2 decades worth of research and development from ASML, and are essential to efficiently mass produce the world's most powerful chips. So most of the main semiconductor chips are manufactured by one of 3 different companies, and these are TSMC, Intel, and Samsung. And these major companies that have massive semiconductor fab warehouses do require different machines and equipment in order to produce these chips. So having a monopoly in this specific machine market is great for pricing power for ASML, and analysts do expect earnings to grow at an annual rate of 30% for the next 5 years, up from 18% that they've achieved in the past 5 years. So that's a really good thing to see, that ASML's earnings is expected to only accelerate in the coming years. ASML also do pay a 1.5% dividend yield, with the 5-year compound annual growth rate of this dividend being around 35%, suggesting that investors are likely to see their dividend payments grow rapidly over the coming years if ASML do keep this dividend growth up. So that's certainly a nice added bonus for anyone who holds the stock. So the fourth company today is Advanced Micro Devices, also known as AMD. So AMD is probably one that a lot of people have heard of, as they are a leading provider for high-performance computing components as well as data center technology. They do produce some of the most powerful mobile and desktop processors, as well as high-performing GPU and graphics components. So AMD's Ryzen series range of desktop processors are the fastest in the world for gaming, productivity, and also content creation. And gaming as a whole is a growing industry, expected to grow at a compound annual growth rate of 10.9% from $178 billion in 2021 to $269 billion in 2025. So this means that AMD will benefit quite a lot from the higher demand for gaming products from the sector growth. Now AMD are however growing even faster in the enterprise, embedded and semi-custom portion of their revenue, with a year-over-year growth in Q1 2022 of a massive 218%, pushing their total revenue for this segment to just below their computing and graphics revenue, which is definitely very impressive to see. Now this segment is all about providing computing power for data centers, and more specifically includes providing for cloud providers like AWS, also for supercomputers as well, and then finally for large-scale enterprise deployments. Now AMD is a very fast-growing company, and they are expecting to increase their revenue in 2022 to $26.3 billion, which is a 60% increase on their 2021 revenue of $16.4 billion. So AMD does currently trade for around a 34 PE ratio, and I do personally think that AMD is at a great price right now for the overall growth that they're expecting to see in the coming years. So the fifth and final company today that I'm going to be looking at is Broadcom. So Broadcom does make semiconductor solutions for Wi-Fi, broadband, data centers, and also infrastructure, and they do have a large portfolio of intellectual property across a wide range of sectors, which does include over 19,000 patents as of right now. So Broadcom, their components can be found in many day-to-day items, such as Wi-Fi routers, mobile phones, factory equipment, as well as car electronic systems. They're also used a lot in cloud and enterprise services, as well as large data centers as well. So if you like to hold dividend stocks, then Broadcom is a fantastic option, as it does have a really nice dividend yield right now, while also offering a growing dividend rate as well, which does grow substantially every year. So at the moment, the dividend yield is around 2.8%, and the 5-year dividend growth rate is at a massive 38% compound annual growth rate. So this means that owning Broadcom stock will get you a nice starting dividend yield that is likely to grow rapidly over time as well. So it really is a great option for dividend investors. Now, despite not having the same levels of revenue growth as some of the other picks today, Broadcom is still growing their revenue consistently every year, and they have been achieving a 14.9% revenue growth as of 2021. So also the valuation is quite attractive as well, in my opinion, and it is currently trading for a forward PE ratio of around 16. So I do think that Broadcom is quite a nice hybrid sort of dividend paying stock, and also a growth stock as well. So that was all for today's video, guys. I hope you did enjoy these 5 semiconductor picks. I am very bullish on the entire sector in general, but I do think that these 5 companies do stand out to me personally as my favourite picks. But obviously it must be said that This video is not financial advice and I'm not a financial advisor, but it is for purely entertainment purposes only. But yeah, apart from that guys, leave a like if you did enjoy the video, drop me a comment, let me know what your favourite stock is out of these 5, or if you have another favourite semiconductor company that you prefer. And also be sure to subscribe if you want to see similar videos to this in the future. So apart from that guys, thanks a lot for watching.